What is up, YouTube? Silver Dragons here, and silver is exploding as the markets open up after the weekend. We're definitely talking about that. Demand is up huge, and we're also going to be covering why some of the large online bullion dealers were refusing to sell you silver yesterday. Absolutely insane. So let's do it. Thank you so much for watching my video. I do sincerely appreciate it. If you want to learn more about investing in precious metals, or if you just want to watch awesome videos about gold and silver, make sure to subscribe to my YouTube channel. Okay, so silver is blowing up. Right now, as I'm filming this video, it's around $29 an ounce. I don't know what's going to happen overnight moving into Monday morning, but I will tell you this, demand is up. There are lots of online bullion dealers that are either completely sold out or they have very limited supply of physical silver to sell you. It looks like the general public is finally getting in on one of the best hedges against inflation. I've been talking about silver for years, and there's many people that are just now getting into it who have never bought silver before. Now, obviously, a lot of this has to do with the people on Reddit who were wanting to do a silver squeeze and effectively buy massive amounts of silver so that the price of silver would shoot up. Now, this is fairly unexpected, and a lot of the large bullion dealers were sort of caught with their pants down, so to speak. And that is exactly why they stopped selling silver. So I'm going to do my best to explain what went on. There was an email recently that went out from the CEO of APMEX. We'll cover that briefly. So the first part is just talking about all the demand they've seen. This was sent out Sunday night, but then they go on to say, any precious metal dealer will take a long position in the futures market to protect against spot price exposure when the markets open. We do this because it is our goal not to take a speculative position on metal. The weekends are unique as we're not able to real-time hedge our position. We took an aggressive position this weekend, but clearly could not have predicted the volumes that were seen. We have partnerships around the world that allow us to cover these long positions, but only to a point. Once we exceeded our comfort levels, we had little choice but to stop the sale of silver on our website. This was a difficult decision to make and unprecedented in our history. As we evaluate the markets, it is difficult to know where silver's price and demand will go in the coming day and weeks. APMEX is highly capitalized and has more than 150 million in inventory to support demand. And then it goes on from there, but I think that's enough for me to dissect and show you exactly what happened. Okay, so we know that based on what the CEO said, that APMEX has $150 million in inventory and they want protection against spot price exposure. Now, this makes sense. If I had $150 million in precious metals, I would want to limit my risk. And they do this by playing the futures market. So basically, over the weekend, they have to decide, do they think silver is going to go up when the markets open, or is it going to go down? And effectively what happened was APMEX thought that silver was going to go down, which is why they took an aggressive position in the futures market. So they're basically taking a short position, hoping that if silver goes down, they're going to be covered, because even though they have to sell their silver at a lower price when the market's opened, they have shorted the futures market and they're going to be protected. But clearly, over the weekend, silver got a ton of hype, and it was looking like silver was going to be up, and it was going to be up big. So they were going to be out millions of dollars potentially because they took out this aggressive position over the weekend. Now, the only way for them to cut their losses was to basically just stop selling silver, because for every ounce of silver they sold, they were losing money. If they could just hold on to all of their silver and wait for the market to open, they could sell their silver at a higher price. So it didn't matter that they played the futures market and lost. They will still make up those losses with the more expensive bullion. But this is really bad for the consumer, because not only were we not able to buy any bullion at all, especially at the modest price that it was, now we have to pay a higher price and a higher premium, because I don't know if you noticed this, but premiums got jacked up when the market opened up, when they started doing sales again. Come on, a $12 premium on American Silver Eagles? That's just purely trying to take advantage of new consumers who've never bought silver before and don't know how much a premium should be. It should not be that high. All right, so now that you know why some of the online bullion dealers shut down over the weekend, I'll let you decide what you think about that. I mean, me personally, I think they have silver. Clearly the demand is up. People want to buy silver. So why don't you just sell it to them? You know, if they go out of business, then obviously they can't help out the customer anymore. But I don't think they were really in jeopardy of completely going under. It would just be losing a fair amount of money. So that's just sort of my take on it. I mean, this probably won't happen again because next weekend I feel like they're going to be a lot more careful with what position they take. And they did say this has never happened to them before. So anyway, now that we've covered what went on over the weekend, let's talk about silver now because it is going up in price and it is gaining steam. One thing that we do know is that when the demand increases, the price for silver usually increases with it as well. So a lot of the people from Wall Street Bets are buying SLV, which is the iShares Silver Trust that JP Morgan is the custodian of. And the thing is, you can effectively never get physical delivery from SLV because you have to have such a large position, and I highly doubt any of these people are going to be taking $1 million positions in SLV. And even if they did, JP Morgan can still deny them physical delivery for whatever reason they come up with. So where's silver going from here? Is it going to continue to be squeezed? Is the price going to continue to rise? I did make a video talking about the potential of $1,000 silver. If you want to see that video, I'll put a link up in the corner as well as a link down below in the description. Definitely check it out for yourself. But honestly, I think that we will continue to see the price of silver go up just because the demand is up. And a lot of the people that are getting into silver now have never bought silver before. And so we have brand new people coming into the market. And once you buy silver for the first time, especially if you buy physical silver and you can hold it in your hand like this, it's like, wow, okay, I need to buy more of this. And if the online bullion dealers have a low supply, then clearly we're going to see rising prices. One other thing to note is that the U.S. government is basically out of American Silver Eagles. And so the U.S. Mint is on back order. So American Silver Eagles are going to be hard to come by, and we will see higher premiums on those for the next few weeks or months. But a lot of us that went through this last March are sort of used to this by now, right? So we'll definitely have to keep an eye on that, and I'll make more videos as that develops. But anyway, what do you think about what happened over the weekend? What do you think about these large bullion dealers refusing to sell to the public? And what do you think about the price of silver going up? Do you think it's going to continue to go up? Feel free to leave a comment down below, and I'll see you all in my next video. Silver Dragons out.